Is Canada heading towards serious economic trouble in 2026? Right now, warning signs are flashing across the country: inflation pressure, high interest rates, housing market slowdown, rising household debt. So what is really happening to the Canadian economy, and how will it impact everyday Canadians? Let's break it down clearly and simply. First, interest rates. The Bank of Canada raised interest rates to fight inflation. Higher rates help control prices, but they also make borrowing more expensive. Mortgages cost more, car loans cost more, business loans cost more. This slows economic growth. Second, the housing market. Canada has one of the most expensive housing markets in the world. Cities like Toronto and Vancouver saw huge price increases in recent years, but now, higher mortgage rates are cooling demand. Fewer buyers, slower sales, price adjustments in some areas. If housing slows too much, construction jobs and related industries may also slow down. Third, household debt. Canada has one of the highest household debt levels among developed countries. Many families are carrying large mortgages and credit card balances. If interest rates stay high, monthly payments become harder to manage. This reduces consumer spending, and consumer spending drives the economy. Fourth, global trade. Canada depends heavily on exports, energy, natural resources, agriculture. If global demand slows, Canada's export income could decline. This would impact GDP growth. Now the big question: is Canada heading toward a recession? Some economists believe growth will slow significantly. Others believe the economy will stabilize gradually. The outcome depends on three key factors: inflation trends, interest rate decisions, global economic conditions. If inflation continues falling, the Bank of Canada may reduce rates in 2026. Lower rates could stimulate housing and business investment. But if inflation rises again, rates may stay high longer. That would increase economic pressure. So what does this mean for Canadians? If you are a homeowner, prepare for possible rate fluctuations. If you are planning to buy property, watch mortgage trends carefully. If you run a business, manage cash flow conservatively. If you are investing, diversification is important. Economic slowdowns create risks, but they also create opportunities. History shows that Canada's economy moves in cycles: slowdown, adjustment, recovery. Panic decisions can lead to losses. Strategic decisions can create long-term growth. Right now, the Canadian economy is under pressure, but it is not collapsing. The next 12 months will be critical. Policy decisions, global trade shifts, energy prices, all will shape Canada's economic future. If you want more updates about the Canadian economy, interest rate news, housing market analysis, and financial strategies, subscribe now, because understanding economic trends helps you make smarter financial decisions.